Hello traders, hope everyone had a nice week. This is BA with this week's edition of the Weekly Perspective. The Weekly Perspective is where we take a little time out and reflect on all of the market's movement from a longer term perspective. Our purpose for the Weekly Perspective is to identify which sectors are moving, which ones are lagging, so that we may be able to refine our trading vehicles inside of our daily top and bottom report that we publish every day. So hope this weekly perspective finds you with passing a good trading week, and hopefully this sets us up for a good week to follow. So this is for the trading week of 9 through 13 October. So let's go ahead and get started. Alright, first thing we're going to take a look at here are the major markets. It's what I call the markets that rule the earth. These minus the dollar, these are the markets here that we need to always keep our eye on. I left one market out this week. I'll provide extensive coverage next week, and that's on the interest rate markets. So we'll catch those up next week. So anyway, here's a 3-month comparison of some of the major markets and how they've done. So 3 months from going back from this past Friday, oil has rallied the most, followed by tech, small cap stocks, and the Dow. We've got S&Ps up 6% in 3 months. Gold and bonds, everything's above the zero line here, folks. So anyway, the last 3 months has been bullish all around for everything. I don't know that there's one asset class that's lost money in the last 3 months. Let's take a little longer look at these markets here. Let's go back year to date and see how they're done. So the NASDAQ has just screamed up this year. All the other markets, none of the markets have taken a breather whatsoever. So we've got NASDAQ tech index leading up about 25%. Just keep in mind, guys, these are approximate numbers, plus or minus, fractions of a percent. I do not have any dividends calculated in with these calculations either, so bear that in mind as well. So in case you pull up somebody that has data, has all of the dividends factored into these year-to-date returns, they're going to reflect slightly different numbers than I have. But anyway, this is just a good gauge for us. So anyway, we see that the NASDAQ over here is just ripping higher, continues to do so. We see our laggard down here is the oil from year-to-date. Now we remember 3 months. We did our 3-month comparison back up here. Oil, crude rallied strongly in this 3-month window. But year to date, oil has been lagging, has been a laggard. At the tail end of this, guys, we'll provide a summary so that we'll take all the stuff that we're looking at and try to write that up into one cohesive ending that makes sense to this. All right, so let's move down to take a look at commodities. 3-month comparison. We've got cocoa and the agricultural business model right there. Only ones above that are positive for the last 3 months. Everything else is negative. Coffee, sugar, straight up ag products, cattle, and corn. So those things are good. You'll see me mention a little bit later that we need to keep an eye on corn. It is really looking like it wants to trace out a bottom here. So and you can see this is the corn chart right here. Of course, it's not prices, but it's still going to look the same on a price chart. We'll definitely keep a very close eye on corn. FANG stocks, let's look at those for a 3-month comparison. You'll notice Netflix kicked it in 32%, Nvidia's up 24, Tesla up 14. You can see the list up here, folks. The only thing that I do these comparisons, how this helps me is to try to isolate stocks, futures markets, Forex pairs on any major correction that we have. We want to highlight, we want to have a list of stocks that have been moving prior to the sell-off. Those are the ones that will more than likely just catapult up on any after any pullback has reconciled itself. But for right now, Amazon seems to be stuck in about a 7% range. For the last 3 months, you can see Amazon's 7% range at the bottom. Hasn't quite pegged it, but it's gone up 7%, pretty close to it. So that's been the range. It's been a very tight range for a stock like Amazon. So Google, not much different. But when we get a sell-off, if that happens to come anytime within the next, say, 35 years, if we get any type of pullback, then we want to really be looking at Amazon. I think that stock could potentially rocket higher based on how it's been coiling up relative to the other fast-moving stocks. Let's talk a little bit about the SPX and the stock market and sentiment. We've seen more historical precedents set in the last 18 months than have probably ever been seen in anyone's life. I get a lot of my data from sentimenttrader.com. So it's just a really good publication, very reasonably priced. Just gives you another dimension to what's going on in the stock market. So the stage is getting set right now for a potentially what I think is going to be just a huge move down. To counter this huge move up, we're in a stock market move that has never been seen before. There's just every week there's data that comes out, and the data crunchers at Sentiment Trader just scratch their head, or I get the feeling that's what they're doing, scratching their head in amazement at how this market is holding up the way it is. I just wanted to point out to you that this is another phenomena that's taking place as we speak, as it's falling out. That market's never replicated before. This is the first time, and it's something called one-time framing. So it works for any bar that you see. It could be 5-minute bars, but we're looking at monthly bars here. So what we've got is we are on the 11th month right now where the stock market, this is the SPX, the S&P 500 representation. We're on the 11th month where there has never been a month in 11 right now that has came down and taken out the low of the prior month. Guys, that has never ever been seen before. It just looks like this market will never ever turn around. We all know that it will. We all know that it will turn around, and probably turn around badly, just like they all do. But this is just another one of those data points that you just have to scratch your head. So you're like, okay, so I know you're probably sitting back and like, well, what's the big deal if it takes out a low? Well, I'll tell you right now, it's been so long since people have seen a pullback in this market that they've forgotten what it's like. So just for example, where we're at right now, if we come first target on any pullback is going to be the prior month's low. So this month right here, we're over 100 points away, guys, and this is something that typically happens very, very frequently. All you have to do is go back on these monthly bars and look at how often the market takes out a prior month's low. You don't even necessarily have to close below it. I'm just talking about trading down below the prior month's low. We haven't had this is the 11th month where it's never taken place. Never happened. So that's as far back as there is data, that has never taken place. All right, so that's I mentioned that just because we all like to know targets, and everybody always scratches their heads, and there's just a couple of places that are just very, very logical points. And again, like I said, first sell-off in this market, and the prior month low it's going to trade below the prior month's low. That's over 100 points away. That will spook a lot of people because we haven't seen a 5% down move since the last election back in November, when it traded down 5% in the overnight session, but from close of the day prior to the election till open the next, it wasn't down 5. So only the overnight traders got to feel that pain if they were long the markets. Anyway, just another interesting fact about the S&P 500 in the stock market. So just keep that in mind, guys. It's going to happen. It has to. This thing cannot go up forever in infinity. So it will come down badly, just like they all do. So if you're long right now, enjoy the ride, and we'll, as part of our analysis, we'll try to help get you out of these markets whenever they start to act like a normal market. Let's move to the VIX. Take a look at the VIX monthly bars here. Excuse me. You can see here I have a line drawn on the bottom. I've had the line drawn there for quite some time. Several months ago, I mentioned in one of my blog posts that we would see the VIX print the 8s, down into the 8s before this bull market was over with. Well, I didn't expect it this year. I expected it to print in the 8s next year, but you know, it printed in the 8s. I don't have my regular chart up, but that happened. Let's see, 1, 2, 3, probably 3 months ago, maybe back June time frame. Anyway, we are at such a level of complacency. I want to draw your attention to this area right here. We all know what happened. You know, sky was blue, everything was perfect. Testimony at Congress by our Federal Reserve stating, and he was making those testimonies right in this area right here where everything was just fine. And we all know what happened. Everything was not fine. So again, don't ever listen to folks. You got to make your own decisions, come up with your own conclusions. But you can see there's a couple of cycles that play out in the stock market time and time again. One is that low volatility begets high volatility, and high volatility begets low volatility. I don't need to state any more than that, because you can see it firsthand. Low volatility environment, high volatility, low to high, high to low. It just keeps going on and on. We're in this area here where it could go on. I mean, look how long this lasted. We had close to 18 months of extremely low volatility. One spike, one little decent spike in there, tested that bottom and then rocketed up. So yeah, we could do the same thing here. We're due for a pullback. We could see a little spike up and come retrace back down to the line. It could play out like this. We never know. But I'm just showing you what has happened in the past, and that what will happen in the future. I just don't know when. And this is what will happen in the future. Fortunate thing about that is we all know what we're going to do when we get into that situation there. So, all right, something else I just can't get enough of is weed stock. No, and it's not Woodstock back in the 60s. This is weed stock. So the old cannabis plant stocks here in the U.S. So I've been tracking those things. They're just fascinating. I like to watch them move. And we have so far this year, XXI has rolled. I mean, just done phenomenally well. The Praetorian, PREE. Yeah, I don't have my company symbols up right now. Praetorian something or another. You see, I'm comparing them against the SPY, the S&P 500, and then most of these other marijuana stocks are trading down here very low. Now, any of these things can rocket up. Most of these down here, guys, are all penny stocks. I think this one's like $4 or and some change, but everything else is, $1 or under. So I'll keep everybody posted in the daily TNB report on how we're playing these things, and anytime we get a trigger. Okay, dogs of the Dow. Again, I like looking at the dogs of the Dow and some of the dividend aristocrats, because the dogs of the Dow had just got decades and decades worth of data on trouncing the S&P 500. So it's worth noting and keeping track of which dogs of the Dow are really, really doing poorly. So relative to the S&P. Now, you can Google dogs of Dow and find out why that phenomenon works the way it does. But for right now, GE is the most compelling chart and stock as far as dogs of the Dow goes. So I'm watching GE very closely in our top and bottom analysis programs, just to see whenever we get a trigger to ride this thing higher. So what will happen is that GE will close the gap on the S&P. So that's what will happen. We just don't know when. Now, the top and bottom analysis that we do for the daily TNB report will help cue us in on where to take the position that GE could rocket higher, start closing the gap. Another way to play this is a pure up pairs trade, where you put equal dollar amounts in. You sell the SPY and buy GE. So that's another potential play. Not a recommendation, but a way to play this right here. I prefer to take straight up option trades on these stocks because they are known when they start moving, they will move very, very quickly. They will move much faster and harder than the S&P will. So that's why I like keeping track of these dogs of the Dow stocks. Winning sectors. Let's take a look at everything, guys, and see how we got. Over here on the left, have the index or the ETFs that I'm using to. I have a typo here, guys. This USO is actually just oil. It's not oil and gas. So I know what happens whenever I type in oil. Excel will immediately think I meant what I was typing in up above it. So anyway, let's take a look and see what's really cooking in the markets right now. And home construction has ripped above everything. Let's see, and we're doing this from a year-to-date comparison. Semiconductors are next, followed by tech. And then we've got home builders, and you can see where the SPY is right here. Here's our even line for the year. You can see retail. I just highlighted a few of these guys just so you could kind of see where they were. Oil and gas, natural gas, and that's how the sectors lay out right now. So again, we want to keep track of these. Doesn't do anything for us right now until we get a pullback, and then we'll start using this information very, very rapidly, and we'll already have a game plan. We'll know which sectors to go into. All we have to do is drill down, find the strongest stocks, and those are the ones we make our plays on. Forex Pairs. Here's a look at some of the most important Forex pairs. So we've got the Euro US dollar cross rate up there leading the pack, followed by the British pound versus US dollar, and you can see how things lay out after that, guys. So I don't really have any recommendations based off of this this comparison. What is working is the way we followed how these trade on a daily time frame, and where we make our plays through the daily TNB reports. So we had 2 Forex trades last week, both triggered, both were profitable, both hit their profit targets, and one is still open if you were able to just take half your profits off. So 2 very good trades, and so we're going to continue to play these using our top and bottom analysis and our trigger entries. So I don't really have anything other than this is just a nice chart to see how they're doing against each other. Let's go through a quick summary. Sorry about the jumpiness there. Okay, guys, stock market is just too far extended to do anything. We need to wait for a pullback. Like I said, when we get a pullback, the first likely target is the prior month's low in the SPX, without a doubt. It's got to take out one of these lows. We can't go on for infinity, just continuing to propel higher every day, every week. It will come to an end. So anyway, let's just keep let's let the market do what the market's supposed to do, and it'll cycle out of this one of these days, and we'll make a play. I don't. Again, this is my opinion. My opinion is no better, nor is it any worse than anyone else's out there. But I do believe we still have more upside left in this market. But boy, it would be really nice to get a down move. All right, so let's take a look at the bond market. I know we didn't really delve deep into it, but the bond market has been really good to us this year. It's we're in a secular bear market in prices for bonds and bull market in yields. It's the absolute worst environment for borrowers. The last 37 years have been the absolute best environment for borrowers. So if all you have to do is look at a chart and see that bond market interest rates typically run 30 some odd year cycles. So we're on the backside starting a new cycle. So we're going to be the play in bonds is every time Treasury bond futures rallies 10 points from any low, it's an automatic sell. There's no analysis required. I've preached this forever. I'm on my 3rd short sell so far this year of playing that. So we caught the first one back around the May time frame when bonds ratcheted up. They hit one of our numbers right around 10 points off of the low. We sold them there, had a really good play, took profits close to the bottom, a lucky move out. Bond markets rallied back up. We sold them again. Had another nice trade. It wasn't as big as the first one, but we got out with about 75% of that move. They rallied back up this most recent time as soon as they 30-year bond futures started hitting 157, we'll call it 20, all the way up to 158. We began buying puts all the way up into the 158s, and of course we didn't have long to do that. We wanted to build a large position, but we were unable to. The markets immediately started turning, so at least we got a good amount of puts on in 30-year bond futures, and we'll see how it goes. We're looking first target around 147. It's kind of what we're looking at. Commodity markets, we want to keep an eye on corn for a potential bottom in a play. FANG stocks, Amazon is what we need to really look at now. It's the only one we could probably play from the long side on any pullback, say on a 1 hour or 2 hour chart. The rest of the stocks, we need to wait for a broad-based pullback in the stock market. Dogs of the Dow, think GE has the most compelling position right now for a bullish play. So I'm going to be watching that one closely in our daily T&B report. Winning sectors, we need to wait for a pullback and then just be ready to play long trades only for ITB, tech, if you like QQQ or whatever you like for tech. Maybe you like just to play the FANG stocks, that's fine. Semiconductors, and then we just need to be prepared for the sectors at the bottom of the heap to play catch up. So that was the oil and gas, and I'm telling you guys, when these things start rocking, they're going to rock and roll hard. And Forex Pairs, will just keep a close look on those things and see what kind of signals we get for the week. We had last week we had a total of 8 recommendations, only 3 triggered. 2 of them were Forex Pairs. Both of those hit their targets. One is still open. We had a buy trigger on IBM at 145.75. That one hit a target. If you had anything else left on, you're still in the trade on that one. So so we had a good week last week for hitting our targets. And that is a wrap for this week's edition of the Weekly Perspective. We appreciate you tuning in. And as always, there will be a hard copy version of this to accompany the video. Have a good trading week. This is BA signing off.